Hello and welcome back to Explain the Charts. Today is November 14th, 2025, and we are taking a deep dive into Intel Corporation, ticker symbol Intel. Intel is at a fascinating crossroads right now, with some deeply concerning news hitting the headlines just as the stock comes off a massive rally. In this video, we'll break down the latest news, correlate it with the price action, and identify the key levels you need to be watching. Let's get right into the current events shaping the narrative. First, let's address the bearish catalysts that are putting immediate pressure on the stock. News has broken about Intel announcing hundreds of job cuts in Oregon, which is always a concerning sign regarding a company's financial health and outlook. Perhaps more damaging in the current market environment is the news that OpenAI has reportedly excluded Intel from its AI hardware investments, a significant blow in the highly competitive AI chip space. This has led to worries that Intel is falling further behind rivals like NVIDIA and AMD. Adding to this pressure, a recent Seeking Alpha report from just yesterday downgraded the stock to a hold, suggesting its incredible rally might be overextended and that the fundamentals are lagging behind the recent price surge. These events have created a potent storm of negative sentiment over the last 24 to 48 hours. This is the kind of news that can cause institutional investors to pause and reevaluate their positions. However, it's crucial to balance this with the stock's recent performance, which has been nothing short of stellar. According to Yahoo Finance, Intel has seen a massive 46% increase in just the last 90 days, a rally that has rewarded faithful investors handsomely. Earlier in the month, publications like The Motley Fool were highlighting, finally, some good news for Intel stock investors, pointing to a potential turnaround. This creates a classic bull versus bear scenario, where strong past performance is now clashing head-on with a bleak short-term news cycle. So, let's turn to the charts to see how this battle is playing out. Here we have the daily chart for Intel, showing all the price action over the past year and a half. The most immediate thing you'll notice is the extreme volatility. We've seen a 52-week low of $17.66 and a 52-week high of $42.48. That is a massive range, indicating huge swings in market sentiment. There are two periods on this chart that tell almost the entire story: a catastrophic drop in the summer of 2024 and a meteoric rise in the fall. Let's zoom in on that summer collapse first. If we focus on the period from late July to early August 2024, we can see the sheer brutality of this sell-off. On August 1st, the stock closed at $29.05 after a significant drop. The very next day, it gapped down hard, opening at $21.94 and closing at $21.48 on astronomical volume of over 300 million shares. The selling continued for several more days, with the price eventually bottoming out around the $19 mark. This level, between $18 and $20, formed a critical support base for the stock over the next month. A drop of this magnitude, from nearly $30 to $19 in a week, often signals a major fundamental shift, likely a disastrous earnings report or guidance cut. This event established a key psychological floor for the market. Now, let's pull back to the full daily view again. After consolidating in that sub-$20 range, Intel began an incredible, multi-month rally starting in mid-September. From a low around $18.50, the price exploded upwards, breaking through every resistance level in its path. It reclaimed $20, then $25, then $30 with immense momentum and volume. This powerful uptrend culminated on October 28th, when it hit the 52-week high of $42.48. This is the incredible rally the news reports were talking about. That peak at $42.48 now stands as the most significant long-term resistance level. Since that peak, the price has been in a clear pullback, which has accelerated significantly in the last couple of days. Now, let's switch to a shorter time frame to analyze this recent weakness. Switching to the 1-hour chart, we can see the price action of the last few weeks more clearly. Notice how the price was trying to find support around the $38 level earlier this week. That level held for a few days, but the negative news flow proved to be too much. We saw a decisive break below $38 yesterday with significant volume, a very bearish short-term signal. That former support at $38 has now likely flipped to become a new resistance level. Any attempt to rally will first have to overcome that hurdle. The price is now in a clear downtrend on this hourly time frame, making lower highs and lower lows. For an even more granular view, let's look at the 15-minute chart from yesterday's session, November 13th. The stock opened around $37.27 and initially tried to stabilize. However, midday, around 14:30 Universal Time Coordinated, the selling pressure intensified dramatically. You can see a series of large, red candles with increasing volume, driving the price from over $37 down to below $36 in just a couple of hours. This sharp, sustained selling pressure is a classic sign of the market reacting to negative news, in this case the job cuts and OpenAI story. The day closed near its lows at $35.91, indicating that sellers were in complete control into the bell. There was no significant bounce, which suggests there could be more downside to come today. This paints a bearish picture for the immediate short term. Okay, let's go back to the daily chart to recap and consolidate these ideas. We are at a critical juncture for Intel. The key resistance levels to watch on any bounce are, first, the $38 level, which was the support that just broke. Above that, we have the psychological $40 mark. The ultimate resistance remains the recent high of $42.48. On the downside, the stock is currently testing immediate support around $35.50 to $36. If this level fails to hold, the next logical area of support is down around the $34 mark. Below that, there isn't much strong support until you get back down towards the $30 level, which was a key breakout point during the recent rally. The ultimate floor remains the summer lows in the $18 to $20 range, though a retest of that seems unlikely without more catastrophic news. These are the battleground levels for the coming days and weeks. So, what can we expect next? Given the confluence of negative news and the clear break of technical support, a bearish scenario seems more probable in the short term, perhaps a 60% likelihood. In this scenario, we would see Intel fail to reclaim $38 and continue to drift lower, breaking the current support around $35.50. This would open the door for a move to test the $34 level. This thesis would be reinforced if we see continued high-volume selling. Conversely, a bullish scenario, which I would place at a 40% likelihood, requires the stock to hold this $35.50 level as firm support. If it can consolidate here and absorb the bad news, it would show resilience. A strong move back above $38 on high volume would invalidate the short-term bearish trend and suggest the larger uptrend could resume. This would likely require a positive catalyst or a broader market rally to overcome the current negative sentiment. Watch for a potential bullish divergence on the RSI if the price makes a new low but the indicator doesn't. In summary, Intel is in a precarious position. The short-term trend is down, driven by negative headlines, but the longer-term rally was incredibly strong. Your key levels to watch are support around $35.50 and resistance at $38. The market's reaction at these two price points will likely dictate the direction for the rest of the year. As always, please remember that this is not financial advice. It is for educational and entertainment purposes only, so please do your own research before making any investment decisions.